The real cost of starting an AI agency. Before you copy a business model from a thumbnail, understand how AI agency works in practice. Money Machines maps the full economics. Illustrative estimates only, not financial, legal, tax, or investment advice. AI agencies sell implementation services, building chatbots, automation workflows, and custom integrations using existing AI APIs, OpenAI, Anthropic, and similar, for small and mid-size businesses that lack in-house technical teams. This is a services business wrapped in AI branding, not a product company. The mode is client relationships and delivery speed, not proprietary technology. AI agencies typically wrap three service types under one umbrella: chatbot deployment for customer service, workflow automation connecting existing business tools via platforms like Zapier or Make, and custom integrations with foundation model APIs for specific internal processes. The technical build itself is often the easiest part. The harder, less discussed work is discovery, understanding a client's actual process well enough to automate it without breaking something that already works. Because the underlying models, OpenAI, Anthropic, and similar providers, are available to any competitor with an API key, the agency's actual product is delivery speed, client trust, and change management, not proprietary technology. This is a meaningfully different moat than a traditional software company, and it means agencies compete more like consultancies than like tech companies. Client readiness varies enormously and is rarely assessed honestly before a sale. A small business with messy, undocumented processes and no data infrastructure requires far more handholding, and generates far less durable value, than one with clean systems ready for automation, but agencies chasing quick sales frequently underestimate this gap during the pitch. Before evaluating income potential, identify who pays, for what outcome, and why they choose this provider over alternatives. Revenue models include project-based fees, Illustrative, $2,000 to $20,000 per implementation, monthly retainers for maintenance, $500 to $5,000 per month, and occasionally productized packages sold to multiple clients. Commonly estimated agency owners in early stages land 2 to 5 clients before establishing referral flow. Pricing power depends heavily on demonstrable ROI, not AI novelty alone, since the underlying tools are increasingly commoditized. Early-stage agency owners commonly report landing their first 2 to 5 clients through personal network or cold outbound before referral flow becomes the primary channel. The sales cycle before that first client is often the longest and most demoralizing part of building the business, frequently taking 2 to 4 months of unpaid outreach. Project-based pricing, Illustrative, $2,000 to $20,000 per implementation, tends to compress as a niche saturates with competitors offering functionally identical services. Agencies that instead productize a specific, repeatable workflow, the same chatbot template customized per client, for example, can defend pricing better than those quoting bespoke projects from scratch each time. Retainers for ongoing maintenance, $500 to $5,000 per month, are the more durable revenue line since automations built on API-based models require periodic tuning as underlying models update or client processes change, but retainers are also the first thing clients cut when an automation appears to be working fine without visible maintenance. Referral partnerships with complementary service providers, web developers, bookkeepers, marketing agencies serving the same small business segment, often produce higher quality leads than cold outbound, since the referring partner has already vetted the client relationship. Compare gross revenue to net cash flow, they are not the same. Startup cost range, Illustrative $500 to $5,000, tools, portfolio projects, marketing. Startup costs are low, API costs, no-code/low-code tooling subscriptions, and founder time for sales and delivery. Illustrative monthly tool stack, $100 to $1,000 depending on client volume and platforms used. The larger hidden cost is the sales cycle. Many owners underestimate how long it takes to close a first paying client without a portfolio or case study. Margin pressure, high margin on delivery once templated, margin erodes with heavy custom support. Owner labor is frequently the largest hidden cost, value your time at a realistic hourly rate. Startup costs are genuinely low, API usage fees and no-code tooling subscriptions commonly run $100 to $1,000 monthly depending on client volume, which is part of why this category attracted so many entrants quickly and why differentiation on cost alone is nearly impossible. The largest underestimated cost is the sales cycle itself, building a portfolio project to demonstrate capability, since prospective clients rarely take a first meeting seriously without visible proof of past work, consumes weeks of unpaid time before any revenue appears. Client handholding and change management cost far more owner time than the technical build. A chatbot that works perfectly in a demo often requires weeks of iteration once real customer questions reveal edge cases the demo never covered, time that's easy to underprice into a fixed project fee. Agencies fail by overpromising AI capabilities relative to what off-the-shelf tools can reliably deliver, underestimating client handholding and change management, and competing purely on being an AI agency as more competitors enter with identical tool access. Client churn is high when automations break or require constant tuning that wasn't priced into the retainer. Key failure points: overpromising capability, long sales cycles, client churn, commoditizing tool access. Hype content optimizes for clicks, operators optimize for contribution margin and cash runway. Agencies fail by overpromising what off-the-shelf AI tools can reliably deliver in a sales pitch, then struggling to meet those expectations during delivery. A demo that handles the 10 questions a founder prepared for often breaks on the 11th question a real customer asks. Client churn is high when automations require ongoing tuning that wasn't priced into the original retainer. Clients who expected a one-time build and were sold an ongoing relationship often feel misled when the first maintenance invoice arrives. As more competitors enter with access to identical underlying models, price competition intensifies quickly. Agencies that compete purely on being an AI agency rather than on a specific, defensible niche or delivery quality see margins compress within their first year or two. This requires real sales skill despite the low technical barrier to entry. The beginner-friendly framing common in agency selling courses undersells how much of the job is prospecting, objection handling, and expectation management rather than technical implementation. Verdict on AI agency: moderate, technical comfort and sales skill both required, not truly beginner-friendly despite low capital. Startup cost: low scalability, medium automation, medium risk, medium-high beginner, requires sales skill. Verdict: works for strong sales operators, oversaturated for tool access-only pitches. Do the spreadsheet for your market. Run a small test before scaling. AI agencies can work for operators with genuine sales skill and a defensible niche, but the commoditized tooling means the business is closer to a traditional consultancy than a tech company. Success depends on delivery quality and client relationships, not AI access. Before quoting a project, build one real portfolio piece solving an actual problem for a business you know personally, and price your first paid client conservatively enough to account for the inevitable scope creep during discovery. Subscribe to Money Machines for more hype versus reality breakdowns. Educational content only. Illustrative estimates. Not financial, legal, tax, or investment advice.